In today's video, I'm continuing the £100 monthly investment series, but with a slight change, as I'm upping the amount that I'm investing into this account to £150 a month moving forward. But if you have been following the market over the last week, you would also know that people are starting to wonder if the market crash has started, or will the market start to bounce back up? Let me know in the comments below what your thoughts are on that. But if we're expecting a market crash, how should beginner investors react to it? So in today's video, I'll talk about how I deal with this and how you can almost guarantee that you will beat the market by following some really simple steps, mainly by telling you everything you need to know about dollar cost averaging. And at the end of the video, I'll also touch on to the reason why Trading 212 has still not opened up their doors to new account registrations, and what you have to do in order to make sure that you get your free share when they do open up again. Also, other ways that you can get a free share while you're waiting. As you know, over the last few months on this series, I've been investing £100 into a Trading 212 ISA account. And if you don't have an account already and want to set one up, head over to www.ganesh.co.uk/trading212, and then in order to sign up, you can then put your name onto a waiting list to be notified when they start accepting new users. And at the end of this video, I'll tell you everything that you need to know in order to ensure that you will get a free stock worth up to £100 as soon as they reopen their doors again. Now, in the past videos of this series, I've been splitting my £100 in a methodical way, where I put a third of my money into ETFs like the FTSE 100 and the S&P 500, then I put a third into dividend stocks, and then finally a third into companies that I've been researching into a bit, and I generally find them pretty interesting. But over the last 2 months, I've set up a couple of pies within Trading 212 in order to invest. So I thought it makes sense to make my investments easier by putting an extra £50 each month so that I can put £50 into the 3 different splits that I usually invest in. So let's take a look at what the overall portfolio is doing right now. So first of all, you can see that we have £798.95 invested, which is slightly more than what we've actually put in, because we have had some dividend payouts that have been reinvested. Now, if we go into our notifications, we can see some of the dividends that have been paid out. So we can see we've got 1 pence here from the CPC, 2 pence here from Stag Industrial. We've got 1 pence here from Procter Gable. We've got 1 pence here from Realty Income Corporation. 78 pence here from AbbVie. 17 pence here from Apple, etc. However, let's dive in and look at the portfolio in full. So you can see here we've invested £798.95, but we're still in the green, luckily. So we're in a return of £23.21, which is only a 2.91% increase. Now, obviously, with the nature of the markets at the moment, with it going down, I'm actually quite happy with this. Now, I still feel in the long run, over 5-10 years, this is going to go up, and at least I'm looking at trying to make about 10% increase on my investments over a long period of time. If I make any more than that, that's going to be great as well. Now let's have a look at the pies themselves. So individually with the pies, we can see we've actually gone down. So 4.68% on my dividends and also 1.55% on my pie of interest, which means that the investments that I had done previously before creating these pies are actually the ones that have done fairly well, most likely. But hey, at the end of the day, like I've said, I'm doing long-term investing. So a dip in the market right now is not going to make much of a big difference for me. Now, before I do today's investments, I just want to explain to you what dollar cost averaging is all about. So let's say we have Mr. Top Hat here. He wants to invest £1,000 into Index X. But if he was to buy it now, at the price that it is of £25 a share, Mr. Top Hat will only be able to buy 40 shares in total. But Mr. Top Hat is thinking, I think that these shares will actually go down in price. So I'm going to wait a few months and then buy in later when the price has gone down. Now, unfortunately for Mr. Top Hat, the price went up. And 5 months later, the stock price was now £50 a share. This now means that Mr. Top Hat will only get 20 shares in Index X, which is half of what he would have got if he was to have bought the shares 5 months ago. I have an idea. Why don't I split up all the money that I have and then invest an equal amount each month? So let's say, for instance, he was to put £200 a month into the Index X. And let's say, for argument's sake, the price fluctuated between this time period. So for month 1, the price was £25. Therefore, Mr. Top Hat was able to buy 8 shares. Then month 2, it went down to £20, and so he managed to buy 10 shares. Then month 3 and 4, it went back up to £40, and so he managed to buy just over 5 shares each month. And finally, in month 5, it went up to £50, and he would have only been able to buy 4 shares. Now that would mean that on average, after buying 32 shares, Mr. Top Hat would have got the stocks at £31.25. Now obviously that means that he would have got a worse price if he would have invested the full £1,000 on the day 1 at £25. But on the flip side, it also means that he saved almost £20 a share just by investing regularly than spending the full £1,000 all at month 5 when he thought that the stock price was going to go down. Now the key take home here is that when you're not sure on whether the market is going to go up or go down, and let's be honest, as a beginner investor, or even in most cases as an experienced investor, you have no idea which way the market will go. Therefore, the safest way to invest is to take a regular amount of money and invest it into the market at regular intervals. And then over a set period of time, the average that you would have received for investing like this would have made you much better off than if you were to try and time the market and buy at the lows and sell at the highs. Now let's jump back into Trading 212. Now this month, within the account, you can see I've got 2 pies. One for my dividend stock, which when we saw in the notifications, we can see that I've already started to receive my dividend payouts. Now obviously with the little amount that I have invested, I'm only seeing a few pennies per company. But we all have to start somewhere. And the other pie consists of my index funds of S&P 500 and FTSE 100, plus the stocks I picked out last month that are of interest to me and mainly consist of the FANG stocks. So today, as I have upped the amount, I'm going to be putting in £100 into my pie of interest, and the pie will automatically split the money accordingly. And I'll then also be adding £50 into the dividend pie, which will also split up the money accordingly to each slice of the pie. So first of all, let's deposit some funds into the account. So here we go, deposit funds. We're going to do the instant bank transfer free. I want to do £150. Great, so now I'm going to go into my dividends account. We're going to add £50 into here. So £50, confirm buy. And then we're going to go back, go into the size pie of interest. And again here, we're going to add in £100 here as well. Now when the markets reopen again, it will automatically divide the amount of money that I put into each of the pies and then try to buy some more of the shares for each of the different slices within each pie. Now obviously it's a real pain right now for anyone watching this video wanting to do the same kind of investments, as Trading 212 are not taking any new investors. But to be quite frank with you, I don't really blame them, because they've recently posted some metrics of how their platform has grown in the last 12 months. So as you can see here on the screen, Trading 212 has seen a 250% increase in customer growth, an increase of 5,300% of assets under management, 9,900% growth in trades made daily on average, 2,000% increase in daily active users, and they are seeing on average 30,000 new funded accounts per day. Now numbers like this are astronomical for any business, and to grow that much within a year is almost unheard of. Therefore, there will definitely be a large piece of work that's required in order to make the underlying infrastructure robust enough to handle this amount of new business. And at the end of the day, the most important thing for anyone when they're holding money in applications like this is to ensure that the infrastructure is up to the highest standards on being able to scale accordingly to not cause any problems when you need to actually use it. Which brings me back to the point that it's understandable that it's taking a while for Trading 212 to get back up and running as normal. However, what is pretty poor is the lack of communication of when things will be back up and running. Now this is quite disappointing from Trading 212's perspective. Now just to be clear here, when you register your interest on the website currently, you're providing your email address to Trading 212. This will just put you onto a waiting list that will contact you when Trading 212 are ready to take new users again. But as you can see by the numbers that we have shown, they are seeing 30,000 people trying to create new accounts on a daily basis. But this also means that Trading 212 will not be able to track the fact that you have used a referral link or wanted to use a referral code. Therefore, when you do get the email, make sure that you come back to one of my videos and use a referral link again in order to ensure that you will get your free share. And obviously, I'll also get my free share too. But why lose out on a share that could be worth up to £100 or the chance to own a part of a reputable company for free? Like some of my free shares have been companies like Under Armour, for instance. But if you are eagerly waiting on the sidelines, wanting to jump into the investing world, there is also Freetrade. And again, I have a referral link down below. And Freetrade was the first trading platform that I actually started using. And to be honest with you, it's really good as well. The only reason I stopped using it is because Trading 212 offered a completely free ISA trading account, whereas Freetrade charged £3 a month for their ISA account. But over here in UK, you can also invest and get capital gains up to £12,300 and dividends up to £2,000 completely tax-free anyway. Also, either way, you might as well sign up to both Freetrade and Trading 212. That way you can cash in on two absolutely free stocks. So why not head down to www.ganesh.co.uk/freetrade and then sign up to the waiting list on Trading 212 by following www.ganesh.co.uk/Trading 212 in order to find out when they will be opening their doors again, and at least then you have two platforms to choose from, as there will also be some stocks that will not be available on the Trading 212 app but may be available on the Freetrade app, as both platforms are continually adding more and more options to their platform. But that's it for me today. I hope you found this information useful, and I hope you don't start to get fearful of the market dips right now. But at the same time, I'd love to know if you think this is the start of the market crash, or will the markets bounce back straight away? Let me know in the comments down below. But like I always mention, I have no financial background at all. So all the information I provide in this video is just from my own research, and I'm just giving you an insight into what I'm doing with my investments. But before you invest in anything, I strongly recommend that you seek professional financial advice. Also, if you haven't subscribed to my channel yet, head down to the red button and subscribe, and click on the bell so you get notified when my next videos come out. And while you're here, you might as well like this video, comment down below, and share with your friends and family. Peace and love to all of you. See you on the next video. Bye.